Joel and Heidi ho, everyone. Happy hump day to you, wherever you may be on God's green earth. It's wonderful to have you on board. I trust you are faring well. I'm frustrated. God, I'm frustrated. Just don't like the market conditions at the moment. See a lot of potentials, but no money, which is what we're here for, of course. Hi, SF. How you doing? Good to see you in the room, as always. Let's see if we can find something to cheer about, shall we? First up, pound US dollar. And of course, I've got to say, Gary, what a great call yesterday, mate. A couple of good calls in the room yesterday and from our trading buddies. One was from Gary. He asked the question, should we cancel or close the pound US dollar breakout from last Thursday, which was coming back at us, and it was around about the entry mark. And I agreed with that, and we did exactly that. And then, of course, that's the euro we're looking at. And then, of course, the breakout to the low side occurred, and now we've got our stop. Well, I've got my stops at break even. That, of course, is the rule that I'm playing with. As soon as we get 1-to-1, which was about here somewhere, I think, stops to entry, and 2.5-to-1 is the target area. Which is where I'll work that out in just a tick. Happy Wednesday to you too, Paul P. And hello to you as well, sweet. Look, nothing to do here, of course. It's just wait and see if we hit our target of 2.5-to-1. And we won't be trading a breakout today because there's the range. The range is from there way down to there, 200 pips. And we don't want to know about that one. But our target for this one from yesterday is, there's the range, stops and entry, 80 pips. Well, it was a bit more than that, 85 actually. I thought it was. Let's go with 85 is 170, and 42.5 is 212.5. Let's go with 212. So the target is, come on, son of a gun. Let's go with 134.36. That's the target for the pound. 134.36, which is about there. So we're more than halfway there, which is a good thing, not a bad thing. But no trade today. I'm not going to trade that as a breakout. It's already broken out. We caught it yesterday, so no for me. If you want to trade the breakout of today, then go ahead. But I think we've proven that longer term is not a successful way to go, trading the breakout of, well, what essentially is late US and all of New Zealand, Australia, and Hong Kong. So no, it will break, but will it break and stay? There's another question. Want to have a g'day, Ash?
Hey, buddy, how are you?
I'm going well, buddy. How about you?
Good. Yeah, not too bad at all. Not too bad at all. Switching my psychology over here. I'm
going to say, it looks like equities are under a bit of pressure, doesn't it?
Yeah, it does, mate. I mean, we'll see what we get this morning, but I really, probably should have gotten a little bit earlier, but I've managed to fix up the other trade pretty much. So now I've got a nice clean slate to kind of start again, which I'll talk everybody through in a bit.
All right, I haven't got a whole lot to look at, but I'll go very quickly to the euro. Now, the euro, as you guys, if you've been in the room this week, will know, I am refusing to believe that this is going to tank further. It's getting to the point where I may have to eat my words. Certainly if these lows are taken out today, I think I'll have to go, whoops, I think I've got that analysis incorrect. However, at this very point in time, on the smaller time frames, 30-minute chart, I'm getting warning Will Robinson, warning Will Robinson, warning Will Robinson. So there may be, when this candle closes, an inclination from myself to go long here. I won't do it. Why? Because it's the first candle of London session. What I will do is wait on the hourly chart and see what happens. If I get a setup on the hourly chart, I may take that. But I'll keep you posted there. Two one order, one trade that I am in, Kiwi Swissy, which has given me a whole heap of pain. Well, it's not pain really; it's just frustration. I've traded this bar here, and it's multiple setups really. It's a false break. It's a game changer bar followed by an inside bar. Not on this chart, it's not, but on my Fusion Markets account it is. So I thought short entry here made perfect sense. I'm inclined to actually get out of this. Really inclined to get out of it. I just want to see this low go. That's where I'm at. I think the timing might be just a little bit early here. I thought we had a nice retest of the pivots that you can see on this chart, which gave me a absolute clear false break. But I may have to wait for this candle to close up here somewhere at the end of the week. So I'm inclined to, because it hasn't accelerated through this level and gone to the monthly pivot, I'm inclined to think that it's not going to do that anytime soon. I guess I've got to stay there for now until this low is not taken out. And when that happens on, say, the 4-hour chart, if we get a higher low in here, then I'll probably have to get out of here. That's what I'm thinking at the moment on Kiwi Swiss anyway. The other one, which goes along with my theory, if you like, of market going risk off, is this one, Aussie yen. And I see this as a potential short. I've got a pretty strong case for a confluence area here. That looks like a decent horizontal level to me, and the trend line couldn't be any clearer. We do have a reversal bar there. I hate to trade red bars short, as you know, but there is a little bit of a tail on it, so it gives me a little bit of insurance. So the entry is underneath that bar, and the stop loss is pretty much on the red line, which is around about 81.37. Yeah, I'm a little bit above that. So there's the order. If you want to follow it, 80.67 is the entry. We're going short Aussie yen. 81.37 is the stop loss, and 80.20 is first take profit, which is the open of that bar there, pretty much bang on. So they are really the only ones I've got in the market at the moment. Pretty similar trade, actually, Kiwi Swissy and Aussie yen both short. Probably there's an aggregation of risk necessary there if you wanted to be in both of them. But gee, I think it just lines up for me, Ash. I think my interpretation of the market sentiment anyway, being risk off, kind of goes with this trade as it does with Kiwi Swiss.
Yeah,
I don't know. We'll see. It's taken a long time to develop, though, I've got to say.
Yeah, well, it is. I mean, let's talk FTSE, because we'll get a little bit of a picture about market sentiment there. Right, let me show you what we got with the FTSE, which has actually been relatively hot so far this morning, which is interesting in many respects. I have flipped positions, and I'm probably going to remain with a flipping position stance now, rather than digging out the highs. Let me show you what we got. So I have fixed up the other trade, so I'm long up here. I've got a long up here and a long here, and then I started to hedge on the way down. Now everybody knows I got long yesterday around about it was around about this point here, but it dropped again. So I got long again down here, and I tidied up that other one in there. And I've actually taken a short now. So really, I'm flat from all this stuff up here and all this stuff up here. A little bit jiggery pokery, and I've managed to get flat. And this is the thing. What was actually better this time? I had to do one of my hedging systems a few weeks ago, and I did it after 3 positions. This time I did it after 2, and actually it was a lot easier. So I'm going to stick with that now. I'm going to hedge out after the 2nd position, and start putting the 3rd position on a little bit lower. It's a lot less stressful. So anyway, now that's cleared up.
Now you're talking.
Yeah, well, this is what we're all about, mate. I mean, so this is cleared up. Now I've got another sell position in here. So actually, this one's currently losing. But I quite like it. Now, if this continues to go to the upside, then all I'll do is, rather than going in short again, I'll clear out some of these longs. I'll get rid of some of these longs, because the short does look on in the longer term. What we've had with the FTSE, and you know, when we were looking at this, technically speaking, this inverted head and shoulders was the technical level that I was looking at, and we are trading, you know, the technical patterns after we get the idea of the market sentiment and the fundamental picture. Now, I can tell you that this morning, the market sentiment is pretty hot. It's pretty good. It doesn't look like it's going to be collapsing today.
Don't be like that.
What's that, sorry?
I said, don't be like that.
Well, it has been. It's a funny one, actually. You know, and we'll talk about why in a moment. But this is what we were talking about a couple of days ago, and I was saying that really, for this right shoulder to be equal, it needs a few days of kind of messing around here before it breaks down. And that appears to be sort of like what's going on right now. So we did have a nice technical picture here to suggest that this would be a support line, and that has held, and now we're moving back to the upside. Now, on that, if we are going to take this particular bar short, it needs to close at the bottom, and that would be a really good sign if it closed down here. And this is the point I would encourage everybody to go short. The longs look a little bit dangerous, and I'll talk about why in a moment. But there's a little trend line here, and there's also some pivots around here. So if this can't survive up here for the full hour, so you're basically waiting, really. You know, there's no real point in taking a trade with a FTSE just yet. I don't think, anyway. I think you're better off waiting for the hour. And if this can't survive up here for the full hour and it comes down here within this trend line, that is going to be very, very negative. And that would be a really good trade signal to the downside. Because like you, mate, to me, the market sentiment has shifted, which is why I'm okay just holding the shorts. And I'll probably now start building in positions on the short. The early signals are for the long. Early signals are for the long, but I'm not going to play with that today, because I've now flipped my kind of I'm now in I suppose strategy 2 mode, which is looking for the longer term move rather than those little chunks out, because I think this market is turning. And if we look at some of the evidence that is kind of coming from this, let's look at the S&P's closure. Look at what happened in the S&P over the last few days. Massive moves to the downside. S&P's done the same thing as the FTSE, where it's managed to find some support here. But what's changed to make the S&P bounce and start moving back to the upside? Well, apart from the Evergrande situation, you know, where they've got some sort of $1.5 billion bailout, which just puts the bailiffs at bay for a little while. Not a lot. Jerome Powell and I can't remember the other Fed speaker yesterday, but they're both signaling tapering in November. So bond yields start go up. You know, the gold is continuing to come down because the dollar is strengthening. And there's no other signal that is suggesting that we should be flipping positions of the market sentiment. It still looks negative. And we've been talking about a potential downward movement in the stock market of possibly, I think Julian was talking about like 10 to 20%. Now, of course, just because Jules says it doesn't mean it's going to happen, but it does mean that when an experienced trader who's done his research says it, that we should sit up and listen and sort of say, is that possible? And then when we start to see the price action do this, then we need to start taking it even more seriously and start thinking, well, what could drive it in the opposite direction? Because at this point, he's right. You know, at this point, the trend to the downside has started. So it certainly appears that it could happen. Now, looking on the dailies, the S&P does have a level of resistance. It's getting a bit messy at this point. Probably there's a level there that we could possibly look at. As I say, it's pretty messy, mate. So difficult to find the absolute line. A little bit of a move back into this area, and I would have thought stock traders would get interested again for some downside. Now there's another trend line there, which gives us confluence. So that looks to me like an S&P push up would be a perfect area for us to start short. So I don't really want to mess with the FTSE to the downside. Sorry, to the upside now. I'm quite happy to start building in the short position, but because this kind of move that we're getting right now, it looks so keen that it almost looks like it's got the blow off top kind of look about it, even though it's not a blow off top because we're not at the top. But it's got that blow off top about it. It's got that feel of like surge the market up, get everybody going long again, and then dump your position. We do need to get the signals. We've got to get the signals right. So the first point of call, as I say, is this hourly bar. You know, that's opened up really keen. That can't survive up there. The short signal looks well and truly on. So my suggestion is just wait for that to move down. But there are very few signals that are coming out, as I say, that are saying go in the opposite direction. We got China also, you know, that they all already went into a bit of a slowdown before we even started talking about this. Evergrande, big problem. The tapering situation, big problem. Look at the Nasdaq. You know, off the back of the tapering this discussion. This is what happened with the Nasdaq. Again, it's on a level of support down here, but the Nasdaq, you know, from 15,700 has come down nearly 1,000 pips. So we're talking about what would that be? What, like
6.5%.
6.5% move to the downside. Now, when you look at this with the Nasdaq, and I think the Nasdaq's a bit cleaner because, you know, the Nasdaq does have quite a nice level here. And again, that would suggest, and look at the confluence area as well. Mm-hmm. Looks like a nice horizontal level across here somewhere. So confluence area there. So a push to the Nasdaq, you know, maybe a 0.5% move up, and then we start to come down. So signals are suggesting that that the market's going to try and grab back a little bit before moving to the downside. But this is looking extremely ominous, mate. It doesn't look good at all.
Sounds like a sell the rallies thing to me, mate.
Yeah, exactly. So it does kind of back up what you're thinking about the position that you're in. Gold is getting in all sorts of problems because bond yields are going up. You know, but gold finds it very difficult to kind of where we sort of like getting this move in a way to a risk-off environment, and I don't know what's happening with the yen, so I'll leave the currency to you actually, but so we can analyze that. But and the Swissy, what we're seeing with gold is that gold is suffering because the bond yields are rising. Now there will be a cap on that at some point, and when that cap happens is the point that I'd like to see whether we can get a rally out of gold. But I read a headline earlier, Forbes saying, you know, get some gold, get some silver, get some Ethereum, get some Bitcoin because a market crash is coming. And the signals are just there. You know, whether we get an out and out crash is a big question. But because we reach such highs with the stock market, inevitably it's got to come back at some point. It's got to. And whether it comes back hard, whether it comes back soft, that's the thing we don't know. But the value has to be coming out of it. If the Fed is starting to taper, money is not as flowing as it was. Now, the Fed's argument will be, we are not raising interest rates, okay? So we're not making borrowing more expensive. We're just tapering the amount of liquidity in the market. Well, the Nasdaq's been surviving on liquidity for 2 years, you know, nigh on 2 years. Now, if you start to choke that supply, then it's obvious, you know, that the next thing that should happen, it won't necessarily happen, but what should happen is that we start to see a downward movement in equities. Bitcoin holding on I think is a little bit surprising. I think, you know, if everything's coming down, I think Bitcoin's coming with it. I get the protection argument, but I would have thought that the Bitcoin back down to near the $30,000 mark. I think that's on with Bitcoin. So I'm looking for short opportunities, mate, just like you. But I think that there's probably a way to play it as to not get run over, because what we got to remember is there could be a couple of different forces going on, forces in play right now. There could be those institutes going, let's get some people on board to the long side so we can dump our stocks. So we'll drive the market up a little bit, get some more people on, and then we will start to come out. We'll start to chip our way out of it, because they're not going to be dumping out in big fashion with the kind of situation we have. We don't have a pandemic going on. What we've got is a potential slowdown of expansion, if you like. So this is why we've got to be careful now. The upside may start to look attractive to people, but that might be the point that there's a bit of a rug pull going on. So I think take it easy. I think build a position slowly, take it easy, see if we're right about the potential rug pull. And if we're not, then some other news event will probably come out and enable us to sort of switch positions again. But I'm going to be quite pragmatic about this one, mate, and see if I can build into a position on the short very, very slowly. And if I've got to hedge the other way, then I have to do that. And I suspect there might be a little bit of that going on. When I've got to hedge, it usually means that there's a bit of a strange turn in the market. It doesn't tend, because I try and stay with the overall trend. Then usually the moves will work okay. But the fact that I'm hedging right now is a bit of a signal to me that we are maybe at a bit of an inflection point.
Yeah, look, I think I'd be keeping my eye on for my style of trading. I'll certainly be looking at the pivots and how they're interacting with each other, because I think that's going to give me an indication as to what really is going on. And I agree. I think it's not crystal clear. And I've struggled this week in particular to agree with what I normally look for, which is market reversal bars or key reversal bars that I now call game changers, right?
Yeah.
And every day contradicts the previous. And when I see that happening, I think, come on, give me something that's a little bit clearer than that.
Well, this is the thing, isn't it, man? And I think when it comes down to sort of trading, is that if you can start to recognise a turn of sentiment, then you're in much better shape. And this is not the environment that we've been having recently. The environment with the FTSE has definitely changed. I don't know exactly what will end up driving it, and I don't know what direction it's going to end up going in, to be honest. But I do sense that there's a change in what we've been having recently. So something could change. We'll bring up a couple of things. Gary, if your question is, Lewis, how you doing, buddy? If your question's about where to put the stop on the FTSE, then
I think it's the breakout trade.
Oh, the breakout. Sorry. Okay.
Which I'll come to.
Let's have one last look before we get to you. Let's have one last look at the S&P, and we'll bring back in the moving averages, because this is what's been going on with the S&P. We'll have the 50. Let's put the 50 at blue. We will put the 100 at red, maybe. Doesn't really matter what our colors are as long as they're different. And we'll put our 200s at green. Actually, I'm going to do the British flag. So I'm going to do my 200 at white. Now, switch back here. So what we've been seeing with the S&P is it bouncing off. Really, it was bouncing off the 50-day moving average. It's had a pretty good time bouncing off that 50-day moving average. Every now and again, it comes down and interacts with the 100, almost there. But generally speaking, this is what the trend has been, bouncing here. There it fell down, didn't quite touch the 100, so the 50 still kind of held. It held there nicely up, all the way up, and it got really, really clean and really crisp. Now we're under this 50-day moving average, but we're bouncing off the 100. And again, this level is working really, really nicely currently. So this point here could be where we start to come down. Now that might even give us even further confidence. But let's put this trend line up. Well, not according to that. Let's just see if the trend line could be there. And it could be there because we could use these closing values here. That's going to be too high. So that's actually not going to work. That's not going to work unless we see some upward movement as well. So really, for this to now react off the moving average and the trend line, the moving average has got to drop down quite significantly for us to take this trade. But it does look from this that the real signal is going to come if we close under this 100-day moving average, this 100-period moving average. I'll bring up the Nasdaq as well and see kind of the same sort of picture with the Nasdaq. Seems to be a lot keener on this 100-day moving average here, and it looks like it's doing the same here. So this is really expressing further volatility in this one. Now this one probably doesn't have. It probably doesn't have. I mean, that could potentially come down there. Let's just change this to the monthly. But look at that on the monthly, mate. I mean, this is where you start to go, the Nasdaq's going to drop, and then you change to the monthly and you go, okay, that kind of makes sense. You know, it's kind of this is the rocket that has gone right up into space. And what happens with rockets? Eventually, they fall back down to the ocean. So at some point,
it's Bitcoinish, isn't it? It's crypto-ish.
Oh, mate, it's an astonishing move, really, on the Nasdaq. If you look back to 2009, the Nasdaq was at 1,800, and now we're at 14,000. Yes, it is. You know, the move has just been unbelievable with the Nasdaq. So there does have an air of inevitability. And if we think about 2009, when this all started to happen, this is when money was pretty loose and within the market. You know, we've had relatively loose situations apart from a little point during the Trump administration, but money was pretty cheap. You know, and has been for quite some time. But
and look, we should all have been in that, right? Look at that incredible inverted head and shoulders sitting there.
Yeah,
How could you miss that? Come on.
Yeah, absolutely. Absolutely. Well, yeah. I mean, if you were in the market, then that would have been certainly something that you would have traded to the upside. That was quite relatively early on in my career, so I didn't really know. I learned a lot from the last crash, but fortunately, it was very educational rather than rather than being something that I was massively involved in. But you know, this is where we are now. This is where we are now. So that would suggest coming down. It's been relatively parabolic. Same with the S&P. You know, that doesn't have any, it's had no pullback. And, you know, what do we always say about pullbacks? That they do come back. You know, areas get tested pretty much every time. You know, 90% of the time, the previous area that it broke out from gets tested. Now, I'd say that's probably, you could probably argue it's here on the S&P, which is 3,500. So it could come back down to here, and this chart would start looking, you know, relatively normal again. But this move has just been, it's been that astonishing that that you know, I think you can easily make the argument when you look at the monthly chart that this is likely to come back into these areas.
Right, look, it will happen. We know it will happen. It's the timing of it is the thing.
Exactly.
And, you know, if you think it won't, think again, because it will happen. Nothing goes up forever. Nothing.
No. This is what we got with the VIX. A high here. It did actually come down, and it's almost making this diamond formation. But, you know, again, the VIX in itself is giving us signals because it's saying, I don't know what to do. So there is uncertainty out there. So the signs are there, mate, but it doesn't look like the timing is, and I think that's the key. It's how is everybody going to interact with the timing of this stuff?
Yeah, I think, as you said before, let's little bits chip away. If the setup's there, take it, but try and build the position rather than go, you know, FOMO here. I've got to go in at, you know, maximum. Because,
absolutely right.
Because I'm going to make $1 squillion, you know.
Yeah, absolutely.
That's not the way to approach it at all.
No, I totally agree. No, I don't know how my trade of the week is going. Actually, not too badly. Not too bad.
Well, like I said before, mine's just hanging, doing nothing.
Okay, well, this is managed to get enough of an uplift to kind of be okay at the minute. But Kiwi, Aussie Kiwi, sorry, Euro Kiwi was the one that I was looking at. Might have been a little bit tricky to get in for a lot of people, but there was definitely a setup there.
Yeah, big shout out to Lewis. G'day, Lewis. Made super trade yesterday. Well done. And I'm assuming you exited perfectly at the monthly pivot, and now we're looking for downside, right? Am I right, Lewis?
Well, what was the pair?
Euro Aussie.
Okay.
It was an ash trade.
Oh, right. Great.
He was in a buy zone on the daily chart with the trend line going up there.
Oh, nice.
Put your trend line in from the bottoms or
Nice.
about mid there. Yeah.
Yeah, I see
That's what he saw. And he traded it right up the monthly pivot as we discussed yesterday.
Beautiful, beautiful. Lovely head and
Nice,
shoulders
mate.
here as well.
Yeah, now it's time to look the other way, I think.
Yeah, I think that's right. Yeah, Euro's in pretty good shape against these Antipodean currencies.
Yes, certainly not against the dollar. The dollar's just going nuts.
Yeah, yeah. Well, with the dollar going nuts, and this is the thing, isn't it? I mean, that's one signal that I haven't even looked at right now is the dollar going nuts.
Oh yeah, it's through. It's through.
Yeah, it does look like it is through. So, oh yeah, that was the point there. Do you know what? I mean, this is the almost ideal kind of inverted head and shoulders where you get the right shoulder through the trend line. And that does look like it's going up to that next level now, doesn't it? Around about 94.60, I've got, mate, for it to get some open water.
Mine was, hang on, I'll have a look at it. Can't remember now. We do have a big red line up there somewhere. Dollar index. No, I got 94.80.
You're 94.80. Okay. Okay, we're pretty close. Yeah, I got it, mate. Yeah.
It's a bit of a cloud of a price. But
yeah. I got you. It's basically this high, isn't it?
It's the W.
Yeah, I'm with you. Yeah, I would have picked that same level. 94.80 looks right. Mine was a bit general. Actually, maybe I wouldn't actually. No, I probably would go there because of this. I'd probably go with the close rather than the high.
Mm-hmm.
So yeah, but
it's destined to go there anyway. It's pretty much perfect. In fact, I counted the candles in that consolidation, both coming down and going up. I think it's one short. I think there were 15 on the other side and 14 on this side.
Right.
So it's pretty predictable if you look at that.
Yeah. Yeah, that looks pretty good.
But trading it, of course, is another thing, as always.
Yeah. Yeah.
So you done?
Yeah, all done, mate. Let's have a look what you got.
All right, we'll have an answering of Gary's question first up, which is probably something I need to spend a bit of time on for those of you.
The trade of the month? I didn't know we were doing a trade of the month. Is this yours?
No, I think Gary's suggesting we do have one.
Oh, okay. Oh gosh. Okay. All right.
I could be wrong, but that's what I'm thinking. You should have the pound chart up, right? Remember I said earlier that this will break, but it may not last. It's looking like that daily pivot test. Okay, so the pound US dollar breakout. Let me show you the parameters on the one that we're in. Get rid of all these. That will make it a lot easier. Okay, so Gary's asking me, and I said earlier that this range here, and the range that I'm trying to break, right? Ash and I did a fair bit of back testing on this some months ago. We must do it again, and we found that the best range to produce a breakout was that of the previous day plus the current, the day to date, if you like. So in other words, the high of yesterday, in this case, it was the day before, and the low of whichever is appropriate, which turned out to be pretty much the same thing. So it was the range of Monday that we were trying to break, which is exactly what happened, of course. Now, Gary's asked me what is, and I said today that range is too big for me. Now, there really is no set limit to that, Gary. So the range being 200 odd, sorry, it wasn't at that point, it was 200 odd pips, so very close to 200 pips. That really isn't the issue. The issue is, does it look like a range? And the answer is no, it's got to be no. How do you define the range is a great question, but really we've had the breakout. And I think that is the message of this chart. The breakout has already occurred. Will it occur again? Maybe. But you've got to, I guess, take into consideration that when you've had a big move in the market, there's two things likely to happen next. One is consolidation and the other is retracement when you've had a big move in the market. So I'm expecting exactly that today, maybe to here, maybe back to here. I don't know. Who knows? And then it may or may not go again. It'll depend on the dollar strength, as I said yesterday, but it looks as though the dollar's through resistance at this point. So you're probably expecting more downside on the pound. So that really is the criteria rather than the size. So when I said, okay, that looks too big to me, what I actually meant was the breakout was too strong and therefore we don't have a range. Okay, we've got a range inside today and, as I said, the last bit of US session, but that's not what we're trading. We're trying to trade the previous day plus the current price, if you like, or the day to day. So I hope that makes that a little bit clearer. It is not preset that we have an absolute limit to the range. It's just not like that. If we've got a breakout, we're expecting this or this. And I think, that just goes back to basics for me. After a big move, I was taught from, well, I don't know about day one, but from probably day 20 on, that after we've had a big move, one of two things is going to happen. You're going to get consolidation or you're going to get retracement, one or the other. Well, you've got to expect that, right? That's why we don't sell the bottom of a big sell-off, right? We wait for the pullback. It's, basic technical trading, I suppose. So that's where I'm at with that. Those of you who don't know, we just use the high of the previous day, or if it's current, then we use the high of that combination. Like I said, the previous day plus the day to date, and it's normally around about here somewhere. And we find the low, we put an entry 5 pips above the high and an entry 3 pips below the low. That's all about getting the spreads out of the consideration if we get an equal. And then we cancel whichever one doesn't trigger. So in this case, yesterday, short triggered, so we cancel the long. As soon as we get to 1 to 1, we move stops to entry. And as soon as we get 2.5 to 1, we close the trade. That's it. There's nothing more to it than that. There's no TP1s. It's just bang, the risk times 2.5 out. That's it. Okay, so I hope that explains that one. Euro dollar was going to have a look at, wasn't I? And it gives you a candle like that. My God. So I won't be trading euro dollar at all on the hourly chart. No, and this is the part that makes it really, really difficult with the first candle of London session. It's why I don't trade it. If you saw what happened to the pound, exactly the same is happening to the euro, as you would expect, against the dollar. Imagine you've got in short and the market just goes bang back in the opposite direction. That happens quite often in the first on currency pairs in the first candle of London session. So that's why I don't trade them. And now it's given me a candle that I can't trade. So I just sit out and wait for the next thing to happen. As far as the orders are concerned, Kiwi Swiss is just about entries, not doing a damn thing. This is going to break out, obviously, at some stage. Where to? Look, my analysis says short, but I'm not that comfortable here right now because you can see that we are at a support level and it's quite possible for this to go back and have another look at the weekly pivot. It's still showing me false break is on, but yeah, like I said, I'm not that comfortable. Aussie yen have been triggered into Aussie yen, and that's pretty much the same thing. It's come straight back as euro dollar and pound dollar. So the market is jittery. I don't see anything that's really crystal clear. Euro Aussie, we were talking about that with Lewis's beautiful trade, and he traded off the bottom here, took profit at the monthly pivot, got out of the trade, and now it is coming back beautifully off those pivots. And a retest of the confluence area here would get me interested in trading that short. That's the 4-hour chart. The game changer bars for today, there were 9 of them. I won't go through them all. There was one that was really interesting, and it was Euro
Mate,
Swiss.
that Euro Aussie there is a great lesson in trading levels. You know, we all kind of like to use indicators, and this is the thing that I try and drill into people when they're starting to trade, is that you want to have your clean chart, and this is why a clean chart is so important to look at first, because when you can get your levels, you know, your buy zones and your sell zones, and know where the market is more likely to go in the opposite direction. That's what we're looking for. Where's it likely to sell? Where's it likely to buy off? Where's it likely to close a position? And then you overlay your indicators. That's when you have a powerful system. If all you're doing is following indicators, you're still pretty blind, you know, because all your indicators are doing is they're getting generated from past data. Whereas if you're looking at levels, then you're anticipating what's about to happen, rather than saying this did happen, you know, prior. So this is a great lesson in what I find is the fundamentals of trading. This is really all I do. Everything that I'm doing is based on looking at a level and saying, is this likely to break, or is it likely to hold, or is it likely to reverse effectively?
Well, exactly what you talk. Sorry, you finished, mate.
Well, I was just going to say, and then you overlay the indicators that you trust to say, this is my signal to say that I'm right here. This is my signal to say it does bounce at this point.
As you were saying, they are lagging indicators. You're looking at what I consider to be leading indicators. One is market structure. Now, the key market structure here for me is the descending channel, because it just keeps bouncing off it, right? You can't deny that. The secondary indicator, so that's a leading indicator.
Yes.
Because as soon as it gets to here, you've got a very, very strong idea as to where it's going next. And same with the pivots. Once it gets to the pivots, you've got a strong indicator as to what's going to happen next, because it just continues to bounce off them. And if it doesn't bounce off them, it'll break it and retest it. And then you've got another directional bias. So, yeah, I don't think you need to have too many indicators, that's for sure. But if you're going to have indicators, make them leading indicators, so you can actually get an idea of what's going to happen next versus what happened yesterday, last week, whenever. So, yeah, I agree 100%.
You know, and it's an interesting one as well, because you know, I suppose that the big practices, and this is the thing that I think that should be practiced a lot before you even you know, have your indicators on the chart. I think there should be a focus on practicing putting lines on your chart, naked, your own lines, and going and finding those levels, and you know, and see if you're right. You know, you almost want to do it for a month and say, right, these are my levels, and on all my charts, I'm going to mark them off. And over the next month, I'm going to see, how does the market react to the levels that I've chosen? And if they don't react if they don't react the way that they should effectively, which is reverse or break through and retest, which is what you're looking for, and then go, then more practice needs to be done on levels, you know, and how you draw levels. I mean, for us, it's quite simple, because, you know, we're just looking for open, that's all we're looking for, isn't it? Open water above and below. If you've got some open water above and below, then you've got, you know, that's how you draw your trend lines and your horizontal levels.
Wow,
and
I
that's
like
a perfect example there. Look at that. Beautiful.
Lewis, I like it, mate.
Yeah.
Looks great.
Now, if you also draw a trend line, mate, from if you take that low, you see your low that you drew the trend line from?
Low?
No, that one there. Go back one. Actually, leave that trend line on. Leave that one on, and choose another. Choose another one. Yeah, choose another trend line, and go back to that one there. Then draw right to the bottom of the one where you drew your first there. Okay, keep going there. Now that also becomes a level of interest, because if
I don't use those. Tell me more.
Well, I mean, do you know why I would? So that one is what time frame you on there?
Daily.
The daily. Okay. So with that one, let me just do the same thing there. Is that the Euro?
That's Swiss yen.
Swiss yen. So let me do the same thing over here, just so I can kind of get my thing in place. Now, if I do that the same as you and do this.
Yes, you could pull it down for channel Lewis. I agree. It's very close.
Yeah, I mean, if you switch your time frame to a weekly, then it becomes a bit clear, almost a bit clearer. So you know, and at that point, I'd be sort of like tidying up that trend line, just bringing it down a little bit, just so it meets the close. Yeah, so around about there. Now that also starts to become of interest to me. You know, that's that particular area I'd be looking at.
Yeah, you've got a horizontal level there as well. Yeah, it's all working.
Yeah, and I draw a level from the top, and then what I've got is a falling wedge. So that's how I'd be sort of like looking at my that's how I'd be looking at that pattern. That looks like another area in there that would suggest some potential bounce points.
Yep. So I'm on board with you, Lewis. I think that is a very, very nice scenario.
Looks pretty good, doesn't it? I mean, you don't want a ton of lines on your chart, but you do want to be aware of where things can happen, because, you know, guess what? If these lines work, then what do you think all the traders are doing? You know, they're drawing these levels, and they're sort of like going, okay, well, this is where this is inexpensive, and this is where this is overvalued. Within our current discussion on the fundamentals.
And notice how many times when you get a bottom that there's one candle that goes through the bottom, or one candle that goes through the top after the bottom's formed, or you think the bottom's formed. That happens so often, and it's someone squashing you. It's the big fellas.
Exactly. Which is what I was saying about the FTSE. You know, this is how it may well be playing out. You know, squash everybody back in again, get us all going long, and get us all kind of fooled in that direction, and then just when they're sort of like with you, flip them out and get things moving to the downside. FTSE actually, sentiment wise, isn't changing. It's still looking pretty hot. Interesting today, actually, the oil stocks are the ones that are going in the opposite direction. A's just come into the room, actually.
Absolutely.
So
hello, A.
Yeah, she might have an opinion on this.
Of course, I've got an opinion. Always have.
Oh, there you go. That's what we need. That's what we need.
Hey, have they let you out yet?
Oh, nearly there.
Getting close, right?
Nearly there.
Yeah.
We're in the home straight.
No, that's good.
Which is good. We're meant to be out of it. Very importantly, my hair appointment is booked for the 13th.
Oh, that is important. Yeah, very, very.
So
important.
2 days grace. How are you ever going to manage it 2 days without getting your hair done?
Oh, look, it's getting to me a little bit at the moment, guys. Let me tell you, I'm only just hanging in there. Hi, Lewis. How are you? Yeah, oil made it back up to 76. It went up there. It just shot straight up there. It just took it. Look, there is a bit of an issue in the UK. You may have noticed.
Yeah.
Ash.
Oh goodness me! I tell you what, you can't get petrol.
Yeah, and I saw the funniest meme the other day. The caption under Prince William was bending down to speak to somebody, and it was captioned, "You don't happen to drive a lorry, do you?"
Do you know, I was at the petrol station a few days ago. I was gonna roll in, and the queues were half a mile back for the petrol station, and it's got. I didn't wait, because I thought, well, if I'm waiting, I'm just wasting petrol. So I'll go in the dead of night. In actual fact, I thought it was going to be quite clever, because I thought, actually, there's another petrol station around the corner that people won't know about, and I went there, and it was completely closed. It was shut. So you can't get petrol. Boris Johnson's talking about calling in the army. He's talking about potentially policing the petrol stations, so to stop people buying more than £30 worth. But there is a big problem right now.
How did they miss that kind of, that labour market scenario?
Well, this is the thing, isn't it? I mean, they missed COVID because of Brexit, and now they've missed Brexit because of COVID. They can't seem to get their house in order at all. And
you can't cut his hair. Come on.
It took them over 5 years to get Brexit sorted, right?
I know. They must be laughing.
How are they going to deal with this? My God.
Well, mate, this is the thing, isn't it? That it would be great if we could say it only took them 5 years to sort out Brexit.
Well, that's true.
It's going to be more like 55 years, I think. By
To
the time.
get something signed off, I'll put it that way.
Yeah, the best is yet to come, I reckon.
Oh, but this is the first example of it, isn't it? Where they've misjudged certain aspects. And I tell you what, if you want to hit the people of the UK and you want to hit any economy really, get into petrol. Forget the strawberry pickers not coming over. Get oil. Go and hit oil, and then you'll see what kind of people will be thinking about the government and what they'll be thinking about Brexit on the back of something like this.
Yeah, but
interestingly, the discussions are quite quiet, at this stage.
Oh, at this stage,
Yeah.
That's because they're all, they've got the muzzle on them and they can't speak.
I guess so. Just a few little things,
the iceberg, isn't it, though, Ash?
Yeah.
It's oil, petrol. Now start talking natural gas, and you're going into winter.
Oh, and coal.
Yeah.
Don't forget coal. I mean, it's all over the place. Somebody even said we haven't got enough wind the other day. It's like, you're kidding me. We're sort of, we're an island. Of course we've got enough wind. It's just it's really, I think the Brexit argument will rear its ugly head close to the election. As soon as we get near that election, we're not close enough yet. A couple of years time, if this stuff's still going on, which it will be, then we'll start to hear Brexit rear its head again.
Wind. Too many of you, too many politicians.
Open the doors of the House of Parliament.
Plenty of wind over there.
Yeah.
Is it like the House of Lords in Parliament there, mate, where they just get pissed all the time? Is that what goes on?
It would be if you were in there. It would definitely
Drunk as lords.
If you were the speaker, I think that would be it. Rather than order, it would be like, can I take your order?
Well, that's exactly how he speaks, isn't it?
Yeah.
He goes off his nut, man.
Oh, he's not there anymore.
Oh, is he gone?
Yeah, he's gone. He retired. He's become a peer now, I think.
Retired
Oh,
or
okay.
got caught in a sex scandal? It seems to be.
Oh well,
wildly
there was a bit of talk of that.
option.
There was a bit of talk of that as well. Supposedly a bit of a bully, and it's terrible, isn't it? You should never meet your heroes. There's so many musicians that I listen to their music and I love, and then I see them in interview or sort of doing something. I think, oh man, I would not agree with that. And I think it's a bit like that with John Bercow. People loved John Bercow, but now we're sort of inevitably he leaves the chamber, and the Tories just dig up a load of dirt because he's really a Labour guy.
Well, they don't. Most politicians and they don't have to dig too deeply,
No, they don't. Because they're all the same parties. They're all the same parties with their secret cameras, making sure that they can stitch the other guy up. Anyway, we are digressing. Where are we at now? Gold has
Let's
not.
have a look at oil.
Well, let's have a look at oil first, and then we've got to discuss gold because it hasn't held that right shoulder.
No, it hasn't. And Lewis.
Do you want my chart?
Yeah. Sorry, but let's look at oil. You got a chart? Who's got the chart?
I do. Yeah. Okay, hang on a sec.
But yeah, we are looking forward to, and Ash, we are actually in New South Wales. We are coming up nearly 90% single first dosed, and coming up very quickly 70% fully dosed. So
Hey,
Okay.
remember these lines, eh? You haven't looked at this chart for a while.
yeah, 33, 22, 33, 44, 55. And you made it, you went in on TTR on Sunday night, and I said, we are going to get back up to, even though we didn't quite make it to 77, and Jeff did actually predict that we would get to 77. I said, however, we missed by a bee's anatomy width.
I was saying the same thing, but
No,
I used the word.
I was quoting
I
you,
used the word.
but I didn't,
I used the-
I didn't
oh,
actually
were you?
use those words.
Oh, okay. Cool.
I was quoting you. I did refer to the bee's anatomy. So that part of the bee's anatomy.
Richard's nickname.
Yeah. And look, we came straight back up there. We've done well. We expected a pullback. We didn't get that pullback. Last week we did. We got a nice
Sorry, I was
pullback.
on the monthly chart.
Yeah, if we can go down to the daily, because we got a really nice, there it is. Last week we got a really nice pullback, 3 bars down in an uptrend, bang, ringed low, bouncing off. And that, if you go to 1, 2, 3, 4, 5, 6, 7. So that 7th bar from the left. No, that'd be from the right, beg your pardon.
That
My
one?
other left. Yeah, so what we've done is, yeah, that one there, beautiful. That was bouncing off the 50 EMA as well. And you got the weekly pivot just underneath that, bounce, bang, straight up. Monday, we did not look back. We opened the market. She shot straight up and went looking for the previous highs, hit those previous highs, and obviously that is a take profit area. And last night we had a pullback. So, and as we've said before, oil, it gets a run of 4 or 5 bars and then it looks for a bit of a pullback anyway. So true to form. We've got the pullback now. She's sitting around just under, so about 74.5. Is that right?
Yep, 74.40.
Yeah. So I'm squinting. I'm squinting because I'm looking at your chart rather than my own. So, and it's tinsy wincy. So with the pressure that's going to be continuing on oil, I think we're just going to see another pullback and another push up. And, you know,
We got a level?
Look, if you go down to a 4 hourly, I think you'll see that it's not a strong pullback. If you go back to
I'm
a 4 hour.
I'm just doing my own for the moment.
Yeah, chat amongst yourselves, kids.
That's right. Okay, yeah, 4 hours.
Look, you wouldn't believe it. Last week we had it's September, and we've got a plant here that's got this tiny little furry stuff that just and it's been blowing a gale, and I've just got it going everywhere. And anytime I've gone outside, I've had to try and suppress this cough, because you know you cough or you sneeze and everybody takes 3 steps away from you. And it's,
yeah. Every element is COVID now, isn't it?
Yeah, and all it is hay fever, because I'm just looking at this pollen in the air and I'm just dying. It's just shocking. So I'm coughing not because I've got COVID or anything like that. It's just hay fever. So it's just a shocker. But yeah, so we've had this pullback. As you can see in the 4 hourly, last night sort of came back, went up, came back down again. It's now just starting to hold and do a bit of a turnaround. It's always interesting with oil, which level it picks for a shallow retracement. I mean, it's had really, really solid step up there from end of last week straight up, almost vertically. So you have to expect a bit of a pullback somewhere along the line. It'll be interesting to see if this forms a bit of a ring low and bounces and keeps going. But yeah, look, I think we're going to see triple digits on oil. Keep saying that. Thank you. Yes. There, 38.2. That's a shallow retracement. If it holds that level, that's a shallow retracement. And I think you can see it more continuation. And the more the headlines feed into this, and I think OPEC are just sitting there rubbing their hands going, thank you very much, we'll just keep the pressure on the supply, because still the US, that Gulf of Mexico area that was hit by Hurricane Ida, and I know it happened a couple of weeks ago, but what that does is it let's explain it doesn't mean when they are damaged, it's not like they go and get, ring up high pages or the tradies come in and you a couple of turns of the wrench and we're back pumping oil again. Those rigs can be offline for a couple of months, getting parts in and getting things up and running again. And just after the hurricane went through, and even though they were very upbeat about what damage had been done, because they said it was better than they thought. 90% of the oil production was offline. 90%. So that does, excuse me, it does quite a bit of a bottleneck on supply. So they did, as a result, dig into inventories, which pushed oil up further. Canada has had a bit of they've also had a few issues with their production, excuse me, lately. And Canada is the largest, their largest exporter of oil to the US. So you keep adding these things and it just compounds, let alone what's going on over in America. And you know, the US, I reckon, coming into a cold, they've got a change of season. You're coming into a colder winter.
Mm-hmm.
They're going to have a similar. That's also going to have an impact as well, isn't it? I mean, seasonally, first quarter of the year is where you expect to see a good rally on oil, but I think it's going to hit a little bit earlier than that.
Yeah, it seems that way, doesn't it? I mean, that's that 50% pullback looks pretty tasty, doesn't it? As a confidence area.
But it's absolutely, and I agree with you there, Ash. But whether we're going to get the fundamentals, if the fundamentals are going to support that. I mean, if this candle ends up and we've got a ring tie and take off again, you know, that's a neat 38.2% retracement, which is, you know, call it a shallow retracement and a strong upward trend.
Yeah.
Look interesting if you got a reversal bar there, wouldn't it?
Yeah.
To go back to here.
Well, there's a little trend line as well there, mate. I don't know whether you want to draw that in. See if there's any sort of
this one.
No, go further. One down from there.
This one.
One more low
this
there
one.
from there. Yeah, wonder what that look. I mean, that leaves us quite a way out. Actually, you can probably tighten that up a bit because I see some. You see that? So move that up a bit because I think that close of that, that might even reach the low of, might even be a bit higher than that.
Oh, you want me to use the closes, don't you?
Yeah, well, only because there's further touches on the close and the low. Maybe just a bit lower. Yeah, it looks like there's more touches there. Yeah, it looks like a pretty good area to me.
Anyway, well, we'll see what happens, won't we? Because
okay,
it's been a bit of a march upwards and onwards. So yeah, as opposed to gold. Now, actually, we were talking about gold a couple of weeks ago, weren't we? And we're just saying, considering the absolute nightmare the US dollar is facing coming into, Janet Yellen has written to. Who does she write to? Not to. I guess she writes to.
She writes to me every now and then.
To express that the US is looking like they're about to.
There's so many millions of dollars waiting for me in some account that she keeps.
She send me a little like that, but yeah.
I don't think it's got much value, eh?
Well, the other problem is, so the US are looking, and I heard there was an argument last night between debate. I wouldn't call it an argument. There was a debate between two of the Bloomberg anchors, and they were saying, one was saying it's reflationary, and the other one saying, no, I don't agree, it's inflationary. And if it's inflationary, we should be looking at gold as a head, go rocketing. But the other thing is, the bond yields are spiking. They're taken up. So now we've got this downward pressure on gold, even though we've got an inflationary scenario, and we've also got the US dollar looking like it's about to default. And it's just like,
say that again.
Not the US dollar. They're talking about they're going to have to close down the government. They did during the Barack Obama.
Yeah, they've done that before. Yeah,
they did that during Obama administration, and they can't pay the interest bill.
Yeah,
so,
interesting days, eh?
It is, and as we're saying, the US dollar is not looking flash on the back of all that information. Therefore, you should be seeing gold.
Yes. Yeah, absolutely. Well, but then how often do you get in inflationary environments where the yields don't go up? I mean, so surely gold's always under this pressure of, you know,
Yeah, but it's meant to be it's meant to be used as a hedge, though, Ash.
I get that.
Yeah,
I get that. But then there's always this correlation between gold and the bond yield. So I mean, how does that kind of get squared off when you've got bond yields that would probably rise during an inflation period? Is it that they don't rise quite as high or as fast? I mean, where does the gold
gold should, if it's as a hedge, should rise faster than the bond yields, shouldn't it?
Right. Yeah. Well, it has traditionally been a hedge, hasn't it? I mean, that's
the other thing is, though, Ash, that the interest rates the yields on the bonds, the real yield you have to take into account the inflation. So if inflation is, then the real yields that you're looking at can really put a real dampener on that exciting yield that you're looking at. Yeah. And that's where gold gets a leverage.
Yes. Yeah.
Okay. So if you take inflation off a real yield rate and get the real yield rate by deducting the inflation from the yield, you are going to end up with a better scenario on gold.
Yeah. Well, do you know, I mean, I love this because really, the lower it comes down, the cheaper it becomes. I mean, I did try and pick up a position. I bought a couple of ounces a few weeks ago, but I sold out, you know, at a very, very small profit because it started to come down again. And if it comes down, great. I'll continue to try and buy some up because I still like it. I still think it needs to be in the portfolio. It's just trying to get a decent price where it just bottoms out a little bit, isn't it, and holds.
Well, at this very moment, that looks like being 1,700, doesn't it?
Well, the interesting thing, look, it could be that 1750. I didn't, I had an area up around, what was it, 1780, I think, and it was holding that quite well. And then all bets were off after that FOMC. And Lewis said, do you think we'll go to 1750? I said, no, I don't think we'll go to 1750. And I was looking at it and I was like, must tell Lewis he was bang on the money there. 1750 it dropped to, but it is just one of those things. It's not following seasonals. It's not following fundamentals very well. It's seasonally coming into this time, October, November, we're meant to see a lot of chop and a slight downward pressure before we return to the glory days of a rally in gold. Coming in towards the end of the year. So that's really what we're looking at. But look at those. That's just, how can you trade that? That's just pork chops, isn't it?
Oh, it's horrible. So the rally, the big rally tends to start when?
There are two dates. One is the 27th of November and the other one is the 16th of December.
Okay, all right. So we're looking at about a month and a half away before we get some seasonals behind the sales as well. Well, I'm okay with that. I mean, if when I look at the monthly chart on gold, it looks to me like 1350 is a possibility, and if that was to happen, then I'd be definitely all over it.
You and everybody else.
Yeah.
1350 is right down.
Yeah, there's a trend line as well. There's a nice primary trend on the monthlies as well, which would kind of suggest it could drag somewhere near that area as well. So, if that happens, then I can't see how gold shouldn't hold that level. I don't know whether it will come down there, and maybe it won't. Maybe that's pie in the sky stuff, and I shouldn't be thinking about it. As a fact, that's starting to. Yeah, I don't know. Because
I mean, when you look at it like that on a monthly, you just look at, oh my lord,
it's coming back, isn't it? When we're looking at the monthlies, it's coming back. We'll see. It needs, if it closes below that pin bar, last month's pin bar, then it should come down to the next level. It should come down to the next level, absolutely. But if it doesn't, it bounces off that level. Because you look over on the other. Yeah, there. That looks like a nice zone as well, doesn't it? What price is that, Jeff?
1540.
1540. I'll be cool with that. I'll take that.
You probably go up a little bit higher.
Yeah, I'd go up a little bit. Yeah, in through there. That's a pretty solid level in through there. What's that?
Yeah.
1550, 1560.
57. Yeah.
Yeah. So that's. But we'll see. Again, it's nothing seems to be. I heard a commentator the other night. She was just throwing her hands up. She said, "Look, Washington is soup. The markets are mush, and everything is incoherent." she just had enough of trying to.
Yeah.
This isn't working, and that is no longer correlated, and you follow the correlation, then all of a sudden, halfway through your trade, it breaks down, and but it was just trying to. And then and they're talking about this old world and new world with oil and energy, and the thing is, with the new world of energy, whilst you can buy, try and trade anything on the periodic table, it's not necessarily available to us traders.
Yeah.
Copper, I'll tell you what, copper. China did a number on the London Metals Exchange a couple of months ago where they bought everything up, set the price up, and then they just smashed the market with flooding the market and brought the price right down. So, and that's the thing you got to be careful with. Is a lot of these smaller markets, nickel, copper, rhodium, and all those kind of stuff. Excuse me. They'll be subject to a bit more manipulation than something like gold.
Yeah, well, Jeff and I were just saying, for us, we're just going to take it slow and build positions slowly and just wait for things to turn either back in our favor or actually give us a defined answer that we're wrong, rather than sort of like going hell bent, because things are different. Things feel like they're different. They feel like there's. You want some skin in the game, but I think you can do it nice and relaxed.
Yeah,
I mean, seriously, looking at that chart, it's very, very difficult to be bullish gold right now. Very difficult.
It's difficult to trade anything on that one at the moment.
That's a massive double top that's telling us we're going to hear next.
Yeah. That's what it suggests, doesn't it?
Well, even you look at that pin bar last month. I mean, you got whiplash just trying to trade anything.
Yeah.
So yeah.
Yeah, interesting market.
Absolutely.
Oh, yeah.
Okay. Well, I think we've covered all subjects of discussion. And
most importantly, we're coming out of lockdown. Hooray.
And most importantly, coming out of lockdown, which is fantastic. And it's much better for your mental health as well as physicality, no doubt. Not only for you, but for everybody else that's been stuck indoors for a number of months. But,
Lewis, I know you're not going to sell your house. I know you're a far better trader than that. I take the point.
Yeah. Okay, well, let's wrap it up. I think FTSE 100 still looks pretty hot, but I quite like, it is a sell zone. So I'm still going to build in positions on the short side, but very, very gently. We'll see what gives with that one. And we'll be back tomorrow, as always, with a quiz anyway, mate, to give a little bit of an update.
Yes, indeed.
Few things happening this afternoon. I think we got Christine Lagarde speaking later on. We got Governor Bailey, Kuroda, and Powell. Actually, we got the central bank 4 out.
Yeah, it's been a central bankathon this week. That's for sure.
It has actually. It has, and it continues today, which means be careful, because they could, one of them or all of them could say something to completely destroy your trade. So be very, very careful today. Probably more careful than normal. And we'll have a look at making a decision maybe tomorrow when we're back in. But thanks as always, Abe, for coming in. Really good of you.
No problem. Thank you.
Absolutely. See you when you're free.
Thanks to the guys in the room. Thanks to you, Jeff.
The 2 weeks. Cheers, mate. And cheers all. Thank you very much for the questions and thought processes that go through the show. Lewis, you're on fire, buddy. I think you're just doing marvelously well done. And Gary, awesome pick up there yesterday as well. Great to see. That's what Trading Buddies is all about. And that's why we're here. Look forward to your company again tomorrow. Until then, bye.